We spend a lot of time on this show breaking down complex topics, tech trends, economic shifts, historical deep dives. And usually when we talk about government ethics or, political scandals, there is a certain established scale to it. You know what I mean?
Oh, absolutely. The fancy dinner standard.
Exactly. You're looking at a shady campaign donation of maybe $50,000
hmm
or a lobbyist paying for a luxury vacation that, wasn't declared on some form. It feels local. It feels tangible.
It's corruption, sure, but it's corruption you can wrap your head around. It fits in a suitcase.
Right. But the document we have on the table today, it completely breaks that scale. We aren't talking about thousands. We aren't even really talking about millions, which is usually the benchmark for a major scandal.
No, we are talking about billions with a capital B.
Welcome back to the Deep Dive. Today we are unpacking a document that is making some very, very heavy waves in Washington. It's titled Professionalized Corruption. It's an interim staff analysis released just 3 days ago. That's January 20th, 2026, by the Democratic staff of the House Oversight Committee. And I have to say, regardless of where you fall on the political spectrum, the picture this report paints of the executive branch, specifically regarding President Trump's second term, is, well, the only word for it is staggering.
It is a dense, heavy read, and we should set the context immediately. This is an investigative report from the Democratic staff, so it has a specific focus, right, on allegations of corruption, so the framing is obviously critical. But what makes this deep dive necessary isn't just the accusations, it's the sheer volume of data. They've compiled financial disclosures, blockchain transaction logs, corporate filings, SEC records. It's a forensic accounting of a massive shift in how the White House operated.
And the core premise here is what really grabbed me right out of the gate. The report basically argues that we've seen an upgrade in the mechanics of influence. In the first term, people worried about hotels, foreign diplomats, booking rooms at the Trump Hotel in D.C. to maybe, curry favor.
Which the report calls analog corruption.
And now
we've gone digital, and that distinction isn't just a buzzword. It changes everything about the mechanics of how influence is bought and sold and how much money can actually move.
that is our mission today. We're going to unpack this transition from, brick and mortar to the blockchain. We need to understand the mechanics of this alleged digital grift, identify the specific players involved, and they range from Chinese billionaires to terror-linked financiers, and explain why the report argues this is a national security nightmare for the average American.
It's essentially a shift from, ethical gray areas to potential national security threats.
Okay, let's start with that comparison the report makes. Term 1 versus Term 2. Why does the medium matter so much? Why is crypto so much more effective for this kind of thing than a hotel?
Well, think about the physics of it. If you are a foreign government, say Saudi Arabia or China, and you want to funnel money to a president via a hotel business, you run into hard physical limits.
Right, there are only so many rooms in the building.
Exactly. A hotel has a maximum occupancy. There are only 365 nights in a year. You can raise room rates, sure, but there's a ceiling. Plus, it's highly visible. If a foreign delegation walks into the lobby with an entourage, people see it.
Reporters take photos.
It creates a paper trail that is hard to hide, and frankly, it's slow to scale.
It's inefficient.
It's very inefficient.
All right.
But with digital currency, there is no friction. There's no physical limit. You can move $100 million in a second anonymously from anywhere in the world. The report calls this exponential wealth generation. You aren't selling a service like a clean bed and room service. You're selling a digital asset that can be priced at whatever the buyer is willing to pay.
And the numbers in the report, they really back that up. They cite a New York Times estimate from July 2025 claiming crypto ventures added about, $7.1 billion to the Trump family net worth.
And that's just paper wealth, the value of the coins they held at the peak. But even if you look at realized profit, actual cash in the pocket, a Reuters analysis found they made $802 million in profit just in the first half of 2025.
Nearly $1 billion in cash.
Yeah.
In 6 months.
To put that in perspective, that far outpaced their real estate holdings, the golf clubs, the licensing deals. Everything they've spent 40 years building was eclipsed in 6 months by crypto.
So the obvious question is, how?
Right.
How does a sitting president make $800 million in 6 months? The report identifies two main vehicles. Let's break them down because the structures are designed to be complex, but the function is actually pretty simple.
The first vehicle is World Liberty Financial, or WLF.
And this is pitched to the public as a digital asset bank, right?
Loosely, yes. The pitch was that customers could borrow, lend, and invest digital coins, be your own bank, that sort of thing. But the Oversight Committee wasn't interested in the customer service. They were interested in the ownership structure.
Because the Trump family wasn't just slapping their name on the building like a licensing deal.
Far from it. The report states that 75% of the net revenues of WLF went directly to a Trump-owned entity called DT Marks DI.
75%. That's not a licensing fee. That's the whole pie.
It's a massive cut. Usually a licensing deal is, what, 5%? Maybe 10%? This is ownership. And here's where it gets into the weeds of value. What was WLF actually selling? They sold something called governance tokens, specifically the WLFI token.
Okay, hold on. I want to be clear on this. Explain governance token to me like I'm 5. Is it like a share of stock? Do I own part of the company?
No, and that's the catch. If you buy stock in Apple, you own a tiny slice of Apple. If they make a profit, maybe you get a dividend. If they get sold, you get paid. This report emphasizes that the WLFI tokens had no intrinsic value. They didn't pay a yield. They didn't give you ownership equity.
So what do they do?
They gave you the right to vote on future decisions for the platform, but, and this is a huge caveat, no single holder could have more than a 5% vote.
So I'm buying a token that pays me nothing, gives me no ownership, and gives me a vote that doesn't really matter because I'm capped.
Essentially, yes.
Then why would anyone buy it?
That is the billion-dollar question. The report argues that the only real utility of the token was that buying it was a mechanism to transfer money to the entity that the president owns. It's a donation mechanism, masked as a financial product. You aren't buying the token for what it does. You're buying it to give money to the seller.
Okay, so WLF is the bank taking a 75% rake. But then there's the second vehicle, which frankly sounds even more ridiculous, the Trump meme coin.
This one is more straightforward and, honestly, more dangerous when you talk about transparency. A meme coin is exactly what it sounds like. It's a cryptocurrency based on a joke or a trend or a personality. Think Dogecoin or Pepe. They usually have zero utility. They are pure speculation.
But the president was involved in this one.
Heavily. The report highlights that 2 Trump-affiliated LLCs owned 80% of the entire supply of these coins.
Wait, 80%? That's not a market. That's a monopoly.
Precisely. So imagine you own 80% of something. If the price goes up even a fraction of a cent, your net worth explodes on paper. And because it's a decentralized cryptocurrency, anyone in the world can buy the other 20%.
And they can do it anonymously.
Right. So if a foreign actor or a lobbyist or a corporation wants to funnel money to the president, they don't need to write a check that shows up on a disclosure form. They just buy the coin on a public exchange. That buying pressure drives the price up, and the value of the president's 80% stake just skyrockets.
And there is no compliance officer checking who bought the coin.
None. It's just a wallet address. It could be anyone.
So we have a bank taking a 75% cut and a meme coin where the president holds the vast majority of the supply. Those are the mechanics.
Yeah.
But the report goes deeper than just how much money. It focuses on the quid pro quo.
The pay to play?
Right. And this is where the story shifts from financial maneuvering to what sounds like a crime thriller. We need to talk about Justin Sun.
Justin Sun. A massive figure in crypto. He's a Chinese national, a billionaire, and the founder of the Tron blockchain. But leading up to President Trump's second term, he was in very hot water.
How hot?
Federal investigation hot. The SEC and the DOJ were looking at him for securities fraud, for wash trading. He was essentially a pariah in the U.S. regulatory system. He couldn't operate freely.
So he's in trouble. And at the same time, World Liberty Financial, the president's project, is trying to launch.
And failing. The report notes that WLF's launch was actually a flop initially. They weren't hitting their revenue targets. And remember, the internal contract said they needed to hit $30 million in revenue before that 75% kickback to the Trump family kicked in.
So the Trumps weren't getting paid yet.
Correct. They were stuck until Justin Sun showed up.
What did he do?
The report states Sun invested $30 million.
Just enough to hit the trigger.
Exactly enough to unlock the payments to the Trump family. Boom, suddenly the money starts flowing. Then he reportedly added another $45 million later.
That is a lot of money to invest in a token with no intrinsic value, especially for a savvy guy like Sun.
It is, unless the value wasn't the token. The report draws a direct line to what happened next. In February 2025, shortly after these investments, the SEC paused its enforcement action against Sun.
Now they just hit balls.
The investigation went dormant. The report frames it as legal favoritism. You have a guy under federal investigation who effectively bails out the president's personal business, and then suddenly his legal troubles just evaporate.
And it's not just securities fraud, is it? The report mentions his company, Tron, has some pretty dark connections.
That's the national security angle. The report cites intelligence that Sun's blockchain, Tron, is a preferred vehicle for terror financing, specifically mentioning groups like Hamas and Hezbollah, because it's fast, cheap, and historically has had, very loose compliance.
So the allegation is that the administration went soft on a guy whose platform is used for terror financing because he pumped money into the president's crypto project.
That is the allegation. It's trading enforcement discretion for cash.
That's heavy, but he's not the only one. There's also the case of CZ, Changpeng Zhao, the founder of Binance.
This one is arguably even more high profile. CZ had already pleaded guilty. This wasn't just an investigation. He was a convicted felon. He pleaded guilty to facilitating money laundering on a massive scale for terrorists, ISIS, Al-Qaeda. He was sentenced.
So he's in the system, convicted.
Correct. But then, Binance, his company, partners with WLF. They provided the platform and the code for the WLF stablecoin. And the report says this deal was expected to generate tens of millions for the Trumps.
And let me guess what happened to CZ.
In October 2025, President Trump pardoned him.
Just like that.
Just like that.
Yeah.
And here is the kicker that the report highlights. On 60 Minutes, after the pardon, Trump claimed he didn't know who CZ was.
Despite the fact that his family business was in active, documented negotiations with CZ's company at that exact moment.
Precisely. The report uses this to illustrate a pattern of deception. It argues it's not just making money, it's trading the sovereign powers of the office pardons, enforcement for investment in these specific crypto projects.
It's a transaction. Legal immunity for digital currency.
That's the picture the data paints.
But it gets bigger than just individual billionaires. The report moves into geopolitics. And this is where I felt like we were reading a spy novel. We need to talk about the UAE, China, and computer chips.
This is the section on national security threats. And to understand it, we have to understand the USD1 stablecoin that WLF launched.
Quickly explain the stablecoin money-making machine for us, because I think people assume crypto makes money by the price going up, but stablecoins are different.
Right. A stablecoin is designed not to move. It's pegged to the dollar. You give the company $1, they give you a digital token worth $1. But here's the trick. The company takes your real dollar and invests it in safe things like treasury bonds, which pay interest. They keep that interest.
So if you have billions of dollars in stablecoins outstanding, you are making massive passive income on the interest.
Exactly. The report estimates the Trumps were making about $35 million a year just in risk-free interest from the float on this coin.
Okay, so they need people to hold the coin to make that interest. Where does the UAE come in?
The report details a massive $2 billion investment from the UAE into Binance using this specific WLF stablecoin. That means a huge chunk of that interest income for the Trumps was coming directly from this UAE deal.
So the UAE is effectively paying the Trumps a salary via this coin. What did the UAE want in return?
Computer chips.
Not just any chips, right?
Prala.
The advanced AI accelerators, the hardware that runs the future of artificial intelligence. The U.S. has strict export controls on these chips. We don't just sell them to anyone. And previously, U.S. officials had blocked sales to the UAE.
Why? I mean, the UAE is an ally.
Because of their ties to China, specifically a tech firm in the UAE called G42. The report says U.S. intelligence showed G42 works directly with China's military and intelligence services. The fear was, if we give the UAE the chips, China gets the tech. It's a backdoor.
So we have a blockade on these chips for national security reasons.
Enter Steve Witkoff.
This is where the conflict of interest gets dizzying. Steve Witkoff plays two roles simultaneously. On one hand, he is President Trump's special envoy to the Middle East. He is the diplomat representing American interests. On the other hand, he is a co-founder of WLF. He's the business partner.
Wait, the envoy to the Middle East is co-founding the president's crypto bank that is taking money from the Middle East.
Yes. His policy decisions affect his personal bank account. And the report alleges that after the UAE poured that money into the crypto project, the Trump administration began relaxing those export controls. They started letting the chips go to the UAE.
Despite the China risk.
Despite the intelligence reports on G42. In fact, the report notes that a G42 executive was even named as an advisor to WLF.
Wow. So let's connect the dots here. A firm linked to Chinese military intelligence invests in the president's crypto project via the UAE, and suddenly the U.S. government says, okay, you can have the sensitive military-grade tech.
That is pay-to-play on a global scale. The report argues that U.S. military superiority, our edge in AI, was effectively traded for crypto investments that enriched the first family.
That shifts the conversation from just unethical to, well, dangerous.
It compromises the security architecture of the country.
We've talked about the billionaires and the foreign governments, but the report has a whole section on the little guy, the average American investor. Because in crypto, for someone to make $1 billion, that money has to come from somewhere.
Crypto markets are often zero-sum. If you cash out, someone else bought in. And this brings us back to the Trump meme coin.
The pump and dump.
The report analyzes the launch of the Trump coin. It was chaotic. But when they looked at the blockchain data, the public ledger of all transactions, they found something suspicious.
The J9TXV wallet.
Right. They identified specific wallets, like that one, that bought millions of dollars worth of the coin just seconds after it launched.
Seconds. That's not fast typing. It's a bot or inside info.
It's faster than humanly possible if you're just refreshing a web page. The report suggests this is clear evidence of insider trading. People were tipped off. They bought low, instantly, before the public really even knew the contract address.
And
Then the hype machine started. The price skyrocketed. Regular people, supporters of the president, rushed in to buy, thinking they were part of a movement. Buy the Trump coin, support the president.
And while the fans were buying,
The insiders were dumping, they sold into the hype, the price crashed. But then there was a twist. The dinner scheme.
oh, I remember seeing headlines about this. This was the contest.
Right. When the price was crashing and people were angry, President Trump announced a contest. If you were one of the top 220 holders of the coin, you'd get a private dinner with him. Top 25 got a White House tour.
Which creates an incentive to buy more and hold more?
It pumped the price back up 49% almost immediately. But the report points out the timing. That price bump coincided exactly with the date that Trump-affiliated entities were legally allowed to start selling their holdings.
So they pumped the price up one last time.
So the president and the insiders could cash out at a higher value.
And who was left holding the bag?
The report is brutal on this. It says 58 specific wallets made over $1 billion in profit, but 764,000 wallets lost money.
750,000 people.
Mostly small retail investors, people who probably supported the president politically. The report frames this as predatory manipulating the market to extract wealth from his own base.
It's the ultimate grift. You sell them a dream, and you leave them with a worthless digital token.
And because it's crypto, it's largely unregulated. If this were the stock market, the SEC would be all over it. Insider trading, market manipulation, people go to jail for this. But in this unregulated Wild West that the administration helped maintain, it happened in plain sight.
So let's try to summarize this, because it's a lot. We have unprecedented wealth generation, billions of dollars. We have anonymous payments from foreign adversaries like China and payments from convicted felons. We have allegations of trading pardons and military secrets for these investments. And we have a predatory scheme wiping out the savings of average Americans.
It really covers the full spectrum of corruption, from the personal enrichment all the way to the geopolitical compromise.
What does this mean for the future? I mean, the report is titled Professionalized Corruption. That sounds like a permanent change.
The expert takeaway here is about the erosion of the rule of law. When you move corruption to the blockchain, you remove the paper trail, you remove the oversight. The report warns that this digital pay-to-play is anonymous and instant. It fundamentally changes the presidency.
It's not just about money anymore.
No, it's about who owns the debt, who owns the loyalty. If a transaction is anonymous, we don't know who is on the other side of the trade. Is it a supporter? Is it a foreign intelligence agency? Is it a cartel?
And that's the scary part. With a hotel, you can see who walks in the lobby. With a wallet address, it's just a string of characters.
Exactly. The report suggests the White House is for sale, but unlike in the past, in the crypto world, we may never actually see the receipt.
That is a chilling thought to end on. The idea that the receipt exists, but it's encrypted in a way that the public can never decode. We are going to link the full 1/2026 crypto report in the show notes for anyone who wants to dive into the raw data themselves. It is dense, but it is eye-opening.
Definitely worth a read, even if you just look at the charts.
That's it for this deep dive. Stay curious, stay informed, and maybe check your wallet settings. We'll see you next time.